All right, it's that time of year again, tax season. And you know what that means? It's also the season for so-called hacks that promise you a massive refund. But what if I told you some of the most popular tax tips are actually traps? Traps that could end up costing you a lot of money. Well, today, we're going to debunk the myths that catch middle-class taxpayers every single year. And hey, you can't blame people for looking for an easier way out. A recent survey found that a full 37% of us would actually consider using AI to file our taxes in the near future. Clearly, people are hungry for simpler, cheaper options. But here's where it gets tricky. Whether you're using AI or some software or just trying to do it all yourself, that push to save a few bucks on tax prep can lead you straight into some really expensive and totally avoidable mistakes.
So that's the million-dollar question, right? How do you sidestep these traps? Well, it really just comes down to knowing the difference between a real rule and a popular myth. And that's exactly what we're going to break down right now.
Okay, so here's our game plan. We're going to start with what I'm calling the modern tax trap. Then we'll dive into those viral tip traps from social media. After that, we'll tackle some super common W-2 mistakes, navigate the surprises that come with side hustles, and finally, wrap it all up with how to keep things safe and simple. So let's kick things off with that modern tax trap. We kind of just touched on it, right? It's this growing temptation to lean on new tech and shortcuts, which, it just opens up a whole new world of potential mistakes. All right, next up, viral tip traps. We've all seen them. Let's really get into the high price you could pay for following one of those online tax hacks. You're scrolling, you see a video that promises some secret deduction, and man, it sounds good. But here's where that path usually leads. You end up claiming credits you're not actually eligible for, you get that dreaded letter from the IRS in the mail, or even worse, you get hit with a penalty. The bottom line is this. If a tax tip sounds way too good to be true, you can bet it is. And this quote right here, it's the perfect rule to live by. If your only explanation for a deduction is, I saw it on TikTok, you are on really thin ice. You've got to be able to back up every single claim with actual proof, not just a viral video. Okay, let's move on to our third section. Common W-2 mistakes. We're going to bust two myths that just refuse to go away and trip up employees every year.
Okay, here's the first one, and it's a huge one, especially now with so many of us working remote or hybrid. It's this idea that if you work from home, you automatically get to write off your home office.
But the hard reality is, for W-2 employees, you just can't take this deduction. It's not allowed. It doesn't even matter if your boss requires you to work from home. It's just a really common and really costly misunderstanding. And here's the other myth that often comes up. People think they can write off their daily drive to and from their main workplace as business mileage. But nope, the IRS is super clear on this. Your normal commute is a personal expense, not a business one. Trying to claim it is a major red flag. So remember, unless you're driving from your office to meet a client, that daily back and forth drive just doesn't count. And now for Section 4, Side Hustle Surprises. The whole gig economy thing has stirred up a lot of confusion, especially when it comes to payment apps and hobbies. First thing we need to talk about is this form, the 1099K. If you're using apps like Venmo or PayPal for a side gig, you might get one of these. All it is a form from that payment company telling the IRS the total amount of money that passed through your account on their platform. And this one form causes two big problems. First, people think, well, I didn't get a 1099K, so I guess I don't owe any tax on that income. Wrong, you still have to report it. Second, people get the form, see the big number, and panic, completely forgetting that it's showing their total gross revenue, not their actual profit after they subtract their costs. This leads us right into another messy area, the difference between a hobby and a business. Look, a hobby is something you do for fun. You can't write off your losses. A business, though, is something you do to actually make a profit. And that means you might be able to deduct your losses. And let me be really clear here. This is a serious warning. Some people try to get clever and call their expensive hobby a business just so they can write off all the costs against their regular income. But if you can't prove to the IRS that you are genuinely trying to make money, they will shut that down fast. So, after all that doom and gloom, what's the right way to handle things? Well, that brings us to our last section, keeping it safe and simple. This is honestly the smartest and safest way to do your taxes. This quote just says it all. When it comes to taxes, boring is your best friend. Getting creative is what gets you in trouble. The absolute best approach is to only claim the deductions and credits that you have the paperwork to back up, period. So, here it is, your simple 3-step action plan. Number 1, keep your paperwork. Get all your income documents, your receipts, everything, and keep it organized. 2, prove your claims. This goes back to what we just said. Only claim what you can actually prove with that paperwork. And 3, stop following random advice online. Just don't do it. Because at the end of the day, a clean, accurate tax return is worth so much more than one that uses some sketchy hack to save a few dollars. Seriously, the peace of mind you get from knowing you did it right is priceless. So I'll just leave you with this one question to think about. The next time you see one of those tempting tax hacks online, just ask yourself, is saving a few bucks really worth the stress, the time, and the potential penalties of an IRS audit? Yeah, I think we all know the answer to that one.